Hello, welcome to our webinar today, Rescheduling's Effects Upon Cannabis Capital. My name is Janet Jackim. I'm a partner and co-chair of the Cannabis Practice Group at Zuber Lawler law firm. Zuber Lawler is one of the most selective law firms in the U.S. and represents clients from 8 cities, offices across the country. Our focus is emerging industries such as cannabis, psychedelics, technology, crypto, and artificial intelligence. I am honored to have several panelists with me today representing key players in providing capital to licensed cannabis companies. Anthony Coniglio from NewLake Capital Partners, the Panther Group's Jordan Tritt, and Luminous Capital's John Darwin. Thanks, gentlemen. Appreciate it. Well, before we get started on introductions, I have to give a few disclaimers. So I'll try to pick up the pace and get through them quickly. The views and opinions expressed today are those of the individuals and do not necessarily reflect the companies associated with this presentation. Zuber Lawler does not encourage the use of illegal drugs, and we encourage you to consult your healthcare provider and your attorney regarding the use of cannabis. Nothing in this presentation creates an attorney or fiduciary relationship. We ask you to seek the advice of your own professionals on the topics that we discussed today. As for format of today's program, there is an open, live Q&A on your Zoom screen where you may submit live questions. We may or may not be able to answer your questions depending upon the time we have, but we will take a look and try to do that if we can. You'll notice that I might direct questions to a specific panelist, but I do encourage every panelist to bust in and weigh in and give us his conclusions and commentaries. We are recording this webinar and it will be posted to the Zuber Lawler website in the next few days in case you'd like to review it again or send it to your contacts. And I think we also encourage the panelists to post the webinar on their pages too. Panelists, would you please give us your a brief introduction of yourself? Okay, Jordan, you're to my left. You go first.
All right, great. Thank you, Janet. Thank you, Zuber Lawler. Jordan Tritt, founder and CEO of the Panther Group. I've been investing in the cannabis industry since 2015. And more recently, we've begun expanding into psychedelics as well as next-gen therapeutics. And our background, we've launched a couple venture funds, a number of single-purpose vehicles, and in total have deployed about $50 million into the cannabis space, both in plant-touching companies as well as ancillary businesses. And we currently have about 30 active portfolio companies, and excited to be here and share our take as a investor in the industry.
Thanks, Jordan. John, how about you?
Thanks, Janet. I'm John Darwin. I'm managing partner of Luminous Capital. We're a New York-based investment firm, and I myself have been in the industry since 2015. Originally as an investor and then an operator of a licensed cannabis vertically integrated operation. And then since 2019, Luminous has been actively investing in cannabis, both plant touching as well as ancillary operations. And we've done equity, debt, and up and down the cap stack, but really focused on U.S. cannabis operations and cannabis-related businesses.
Thank you.
And I guess that leaves me, Janet. So I too will say thank you for having NewLake here and excited to share this panel with Jordan and John today. I'm Anthony Coniglio, co-founder and CEO of NewLake Capital Partners. We were founded in 2019. We are, by our estimates, the second largest owner of commercial real estate, of cannabis real estate in the US. We own 32 properties across 12 states with 13 separate tenants. Our tenants are some of the leading companies in the sector, like a Curaleaf or a Cresco or a Trulieve. On the public side, we also have a handful of smaller private companies, but names like C3 or the Mint, very, very accomplished and very well-run businesses, to give you an example. We've deployed about $430 million across those 32 properties, and we're excited for what the future holds around the cannabis space, and we're publicly traded.
Thank you. Thank you all. Well, let's get started on the effects of rescheduling cannabis upon capital to the cannabis industry. To set the stage, I think I need to briefly recount what's happened with respect to the pending rescheduling activities and at least set the pace here. Well, in October of 2022, the President Biden, directed his cabinet to review expeditiously, he said, how marijuana is scheduled. And he directed the Attorney General, Merrick Garland, to initiate that review. A little more than 2 years later, Attorney General Garland sent a shockwave through the cannabis industry when he circulated a proposal to shift marijuana from Schedule 1 to Schedule 3 under the Federal Controlled Substances Act. For your reference, other Schedule 1 drugs include heroin and LSD. A Schedule 1 drug classification under the CSA means that the drug has no documented medical use and there is a very high likelihood of abuse. In contrast, Schedule 3 drugs include the following: testosterone, estrogen, of course, we had to get both in there, ketamine, anabolic steroids, Tylenol with codeine. Well, if implemented, rescheduling marijuana to a Schedule 3 would make medical use, especially medical research, readily available. And certain tax rules that weigh very heavily today on cannabis companies would no longer apply. This is, you may have heard of this, Internal Revenue Code Section 280E rule, which prohibits illegal enterprises from taking standard tax deductions for their businesses. And remember, at the federal level, cannabis is still illegal. Well, just recently, end of May 2024, the U.S. Drug Enforcement Administration issued a formal notice of a proposed rulemaking to reschedule cannabis to Schedule 3. Just this past week, the DEA had received over 90,000 public comments on the proposed rescheduling. And reportedly, about 90% of those comments supported rescheduling and descheduling. Typically, in the typical process, these agencies would hold administrative hearings and they'd review statistics and medical and other research and then issue a final rulemaking. And that process, I think the last rescheduling of a drug took about 5 years. So absent the administration's interest in accelerating its review, most people think that there will be years ahead of us before this rescheduling is actually implemented. Well, what's next with rescheduling? Our panelists are going to give us their own opinions and their business practices on rescheduling, if it should happen, the timing and terms that are specifically applicable to capital to the cannabis industry. So I'd like to ask some questions. This one is more of an introductory one, and it's directed to everyone. What are the key differences between descheduling and rescheduling cannabis that may impact how you make investment or debt strategies for the future? And are you making decisions based upon rescheduling, assuming rescheduling is going to happen, or are you waiting for more info? Who's going first? Okay, John or Anthony, you're first because you were last. Please.
Sure. I'll jump in. Well, so let's be clear. Descheduling and rescheduling are extremely different processes. And I don't think descheduling is really on the table right now. And I know some people are speculating that perhaps they can go further. I personally don't see it. I do think that it's really all about that rescheduling to Schedule 3. We do think it's more likely than not to happen. We always look at these types of regulatory actions or legislative actions in a percentage of likelihood, because it's really hard to say, because the reality is none of us really know. We're all speculating. So from a probability perspective, definitely more likely than not. I'd probably put it, if I had to put a number, somewhere around 80% likely we'll get that rescheduling final notice announced at some point in the next 4 or 5 months. In terms of our decision-making process at NewLake, we don't make decisions expecting that a rule is going to change. So let's take the Florida adult use. If we're looking at a property in Florida, we won't assume that adult use passes in November. It will be nice to the analysis, but our baseline analysis always assumes the status quo. And so from our perspective, we think it's better to look at these types of regulatory or legislative catalysts as nice to haves, not something that you expect to have when you're doing your underwriting analysis. So if the deal can actually work in a world where you don't have 280E relief and you stay on Schedule 1, the deal should actually work once you have the additional cash flow going to the tenant.
Makes sense. Who's next?
I'm in here. I think similar perspective from our side. I really looking back since 2015, I remember thinking that safe banking was going to be just around the corner, and then thinking that again, and 6 more times after that. And it took a few less than 8 times to learn that we don't bet on government regulations. So as we underwrite companies and businesses, it's really about what are you doing today. And of course, have to factor in that there's going to be additional growth. There's additional opportunity. These regulatory catalysts seem a lot closer than they have been, but betting on those catalysts, especially with the shorter term horizon, has gotten a lot of people burned. So we try and structure things where there's frankly short-term pessimism and long-term optimism, so that it's able to balance those near-term downsides and capture what we see as a really exciting industry to invest in. So, I won't go into similar with Anthony around rescheduling versus descheduling. I do believe we're likely to see it happen, but I think to underwrite and look specifically at that as a reason for investing is a difficult and tough risk for us. So we don't do that.
Jordan, I know you can add more to those comments.
Sure. Yeah. So in terms of rescheduling, I think what we look at there, if and when that happens, also expecting it to happen, is what does it look like if cannabis is in Schedule 3? As you mentioned earlier, all those drugs are produced in a FDA approved facility, GMP, need to be go through normal pharma channels, would potentially open up for research reimbursements from insurance and all that. So there's definitely a shift in terms of what Schedule 3 allows for the industry. At the same time, and I'm sure we'll get into it, at the state level, there's already existing regulatory environments. We look at alcohol as a corollary, and what you have at the federal level is very different at the local and municipal level. So I think that's something to factor in. And then in terms of, John touched on a little bit, like short, medium, and long-term horizon, you have to really factor all of those in, because yes, we obviously have a shorter term horizon for certain reasons, but then as well, you're looking for ultimately, if you're looking at an exit, anyone who's going to come in is going to be interested in the medium and long term horizon, because that's what they're betting on. And so factoring that in and making sure you're making decisions that account for the short term, but also don't eliminate and prevent you from having the medium and long term exit that you want is critical. So a long and short way of saying it adds complexity to it. But as we all noted, we're all smart enough and experienced enough at this point not to make decisions until we know what the information is. And so I kind of expected this to be a little bit of an excitement and jolt, and then hurry up and wait. And that's what we're seeing. And we don't know, even if it passes, how long is the regulations going to take to, and how are they going to treat existing facilities that are already up and running, and the retrofitting and all that. So there's a lot to take into account, assuming the rescheduling happens.
Thank you. Anthony, we have a question from Joseph Schultz. And she's got it up.
Yeah, no, I see it here. Quantify, yes. So what we've announced and said publicly that we think 280E relief would generate somewhere around $500 million of additional cash flow across our tenant base. Just think about that. That is a significant credit improvement. And we've yet to identify, I'm going to sound like I'm pitching NewLake, I don't mean to, but just to provide some context, we've yet to identify a catalyst in the REIT context, because we're a real estate investment trust, where you have a credit improvement to an entire portfolio to that magnitude just from one regulatory change. And so just think about our business for a moment. As the landlord, where we have leases that are 15 to 20 years, for us, a big part of the decision is, will that tenant be in place to be able to pay us rent every month for 15 to 20 years? So it's a real credit analysis, in addition to a lot of other analyses around the real estate and the jurisdictions. And so when you have a tenant that has a meaningful improvement to its free cash flow because it can reduce the amount of taxes it pays, and we all know 280E and how onerous it is, it's a significant credit improvement. So directly to answer your question, we estimate it's somewhere around $500 million across our entire tenant base on an annual basis.
Thank you. I did see a webinar given featuring Boris Jordan, CEO of Curaleaf, and he's publicly stated that his what's being whispered in his ear by his contacts is that there's not going to be any administrative law judge hearings on the comments. So let me just briefly explain that. Typically, there's a final rule issued after or during the process of the review by the agencies. And the agencies are looking at all of these comments and trying to determine whether there's anything that's appropriate to be aired more fully. And some of these commentators may be asking for a hearing, but according to Boris, there's not going to be any such hearing. So that would mean the process could go faster. However, we already know that certain anti-cannabis organizations are planning on suing. And if they're fortunate enough to get a judge to agree to grant an injunction, I understand that the whole process could come to a standstill while these lawsuits are heard fully and appealed and all of that across the country. He thinks that the likelihood of the cannabis industry winning those lawsuits is good, very good. But unfortunately, it's going to take some time for that all to sort out. So
can I just jump in there? I want to make a couple of clarifications. And so, yes, and I heard Boris talk about that recently. Number one, he did say that his sources said that the review wasn't complete. There still could be some comments that could be eligible for an ALJ hearing, but I'd identify that the administrative law judge that the DEA would assign for a hearing in response to one of those comments would come before they filed the final rule. And the injunction that you were referencing, as I understand it, I'm clearly no expert, would happen after there was a final rule that was published. Then somebody would step in to try to get an injunction so that the final rule wasn't implemented after it's announced. And so there's a bit of sequencing here. And so part of the final rule being published in the Federal Register, and the timing for that is getting through not only all the comments, but if there is this ALJ, as they call it, administrative law judge hearing, but then once they do file that final rule, then it'll be, if there is an injunction requested, a lawsuit has to be filed, then an injunction requested, and would a judge, there's some people that are out there on social media that are much more qualified than me, talking about this, the judge would need to deem that they would be likely to win or have some sort of a positive view on the likelihood of success in order to grant the injunction. And so really is, I think none of us really know how long this is going to last, but there's all this is really laid out in statute, Administrative Procedures Act, in the actual Controlled Substances Act. There's a lot of literature out there. I think there's some experts out there that really know how this works. But at the end of the day, nobody knows how it's going to conclude.
So Anthony, just since you showed your knowledge on this, if it were to get to that point where it passes the, gets right before the injunction, right, to that point, whatever it gets to, is that, it gets passed. Is that enough then for 280E to go away, since it's not Schedule 1 anymore? And that's really what 280E specifically deals with, is, a Schedule 1? Or
way beyond my pay grade and my knowledge base, but I'll give you my speculation. My speculation is that if there was, if a judge did grant an injunction, my speculation would be that they would be injuncting or preventing the implementation of the rule, and you need the implementation of the final rule in order to get the benefits. And back to what we were talking about, assuming that you're going to get regulatory relief, my baseline assumption would be nothing happens until it's final.
Yeah. Then this is not a question, but a comment, obviously, just because, we know about some of the companies that have challenged 280E in different ways, whether, this, that, or the other. And so what would be interesting, just from a risk assessment standpoint, as these companies are, figuring out how to deal with 280E, is it going to go away, et cetera? Does it, by getting to a certain point, do they then start to feel more comfortable, asserting their challenges or taking a more aggressive approach to 280E? So that's something, just a comment that I think, we as people in the space, deal with, is this, risk reward and, that aspect of it. So I think it's just interesting to note.
Yeah. Well, John, I think you bring up a good point. It's how do operators in this sector respond if there is a final rule published, even during an injunction, or even if we get to the final and there is, let's say there's no lawsuit, no injunction, and we're totally in a final rule and it arrives. Some people believe that they can go back and file for previous year refunds. Maybe, again, not an expert. That's for you all to deal with your tax attorneys and tax accountants on. But certainly, I don't think anybody should expect it. And the analogy I like to use, is a very novice one, is if they change the speed limit and I got a speeding ticket 3 years ago, can I really go get a refund on my speeding ticket? Now, that's an oversimplification. But to me, the law is pretty clear about how to apply 280E, and 280E is either effective or it's not effective. And maybe there's some creative ways to try to challenge previous tax payments. But go back to that press release by the IRS a few weeks ago. I think they're pretty serious about making sure people pay their taxes, whether they're current or past due. And so I think everybody should be getting ready to deal with the taxes that are due up until the moment 280E officially goes away.
Well, that's just alongside that. That's something we're keyed in on, especially with the upcoming earnings, because I think there was some very aggressive tax statements made in the annual filings, as well as in commentary on the last quarter. And subsequently, IRS came out with their own positioning as well, too. So we'll be watching closely on this upcoming earnings, just, in particular around taxes, which is what everybody has in mind. And I know certain operators are way more aggressive than others, but I think that positioning is something we're keeping an eye on. But similar to Anthony, not making any bets that there's going to be any retroactive relief, as great as that would be, and I know it would be fantastic for the industry, but I think the IRS has made it clear at least where they are today.
Yeah.
How is the industry doing? Give us a foundation as of today. How is it? Is it expecting? Well, I think you answered this earlier. Is it expecting the relief from 280E to save it? Can the industry survive for a few years if it takes that long to get that kind of relief? Is there enough EBITDA to pay for upcoming due dates on loans, et cetera? What are your thoughts?
Yeah, I can start. I think just the short answer, is like what Anthony said. So there are some examples where you have companies that are highly profitable, and the impact to them, from a relief of 280E is monstrous, right? I mean, put $100 million, whatever it is, on the balance sheet of one of these companies, and they all of a sudden are in a much stronger position. The vast majority, 85% of the industry from a operator standpoint, I think they'll get some relief from this, but it does not change the fundamentals of their business, their outlook, where they are relative to competition, et cetera. I look at this industry, from a maturation standpoint. We had the early adopters, and now we've seen certainly in many of the established states, decline in valuations. Many businesses that are unfortunately going through bankruptcy or going out of business. So there is the industry as a whole is at a point where I think the companies that are well capitalized and have the wherewithal to keep going, they're in a great position to be able to expand into new markets, to take advantage of competitors that are not as well equipped. So I think we're in a situation where, as a whole, you're going to see a kind of differentiation in the next couple of years with the haves and the have-nots, and we're going to see a bunch of companies, maybe even some that we haven't known or heard of, that emerge because they started 2 or 3 years ago, and their foundation is not as levered as some of the larger MSOs, and so they've got the flexibility to be aggressive in terms of making accretive acquisitions.
John, want to respond?
Sure. I think a few things there. One, on the industry as a whole, I think it's been an extremely dark, long winter for everyone. And jokingly, saw Kramer on TV say 2 seconds around cannabis with rescheduling. And remember cannabis, we used to talk about that. Whatever happened to that? It was almost ironic the way they talked about it. So I think the industry's been put in this dark corner for a long time. But I also agree with Jordan. There's folks that are operating profitably. Fundamentals continue to improve for strong operators. It will provide a big relief on rescheduling, I think, on the individual operators, but also as you think around the industry as a whole, the things that don't get talked about as much. It's estimated that rescheduling would add about 55,000 jobs to the industry. And there have been studies showing economic impact of $3 for every $1 spent in cannabis. So if you think about the broader industry impact that can come from this, it will really breathe life into an industry that needs it, and add additional talent, allow operators to expand, to grow, and ultimately, I think it'd be a huge bellwether for everyone.
Yeah, the one point I would add is around the concept of adaptability. And I don't think that the management teams in this industry have gotten enough credit for the way they have adapted and managed through the very difficult period that both John and Jordan just talked about. I mean, you think about the layoffs that have occurred. I mean, these are really, really difficult decisions to separate with founders, to lay off staff, to shrink footprint, right? Some people spent years assembling a footprint. We just saw a deal yesterday, right, where Cannabis is trying to right size their footprint, executing deals. And so these management teams are very adaptable to the situations that evolve. And I think, quite frankly, some of them should be applauded for taking some bold moves in order to position their business to, as you said, enhance EBITDA, so that they're in a position to be able to repay some of this debt, or at a minimum, be able to refinance it when those deals come due in 25 and 26.
And just on real quickly on that, because I think a very interesting thing that we saw recently was around, Ascend's refinancing that I think showed, again, a large group of lenders still extremely bullish on this industry. It was a relatively expensive cost of capital, but all capital is expensive right now. Commercial real estate capital is expensive right now. And so I think in the big scheme of things, that refinancing was something that we viewed as an extreme positive and a willingness to stick through this industry for operators that have proven their ability to grow and last long term.
Great comments, y'all. Jordan, we talked yesterday, Monday, I guess, that you had some comments to share with us about how the cannabis industry is going to reorganize, reoperate, change its operational procedures and policies in the event of rescheduling. Can you share some of those with us?
Oh, can you? I don't exactly remember the.
I think
you're referencing, or can you repeat?
Yeah, you were talking about operations. Operationally, how would these cannabis companies change if there's a rescheduling event?
Sure. Okay. Yeah. So I think what's really interesting about rescheduling, I think about in terms of like supply chain. So we have rescheduling creates a whole new supply chain because it presents a fully medical supply chain, like I talked about a little bit earlier, where now insurance, health insurance would be presumably on the table. Again, like we talked about from a facility standpoint, now you have to start producing in GMP approved facilities. So the expertise that you need in terms of people who have been there, done that, set up these facilities, are equipped to deal with all the high regulations. I think that's something that is going to present opportunities and challenges for existing investors. I think as it kind of alludes to, it would presumably open up pharma companies to start making a bigger push into the industry. I think it allows if we look at like other nutraceuticals or other distribution points into mainstream retail, that will start to open up more. So you potentially would be looking at other cannabinoids and THC infused different products. And then this is not a rescheduling comment, but just in terms of other supply chains, I think about the Farm Bill. And, we've seen an article that I think the Atlantic put out recently. It was like, the U.S., legalized cannabis 6 years ago in terms of the Farm Bill. And there's some validity and truth to that, right? When you go to North Carolina and you see THC, and Tennessee and Texas, Georgia, all these states that barely have a medical cannabis program yet, tons of THC infused products are being sold. And so, when Anthony talked about the adaptability, this is, you've got to adapt to now a second and third supply chain that you have to deal with. So it adds the complexity of, where do you position potentially assets, and can you start shipping things across state lines and take advantage of that, or direct to consumer? Do you start doing more of that because it's allowed, because it's not federally illegal if we're talking about a Schedule 3 or, the hemp derived. So it just really gets, again, to the complexity of running a business that is successful in the short term to survive, and allow you to thrive in the medium and long term. And so I just that points to me to the importance of leaning on people who have been there, have shown that they can get through these challenging times, that they understand that the next phase for them may include new people, right? Different expertise, ability to sell into new channels that aren't the dispensary channels. So yeah, I mean, it's a lot of operational pieces that start to come into play, but you can't start moving and predicting and spending until you know when that's going to go into effect. And so therein lies the dance.
Although I have to admit that it seems to be boding well for lawyers.
Yes, always.
What? Always. Certainly a lot of new challenges imposed upon lawyers as well.
Yes, of course.
Well, moving on. Anthony, how would rescheduling impact the valuation of a cannabis company? And particularly because you're involved in buying and leasing back real estate, I'm assuming you would have an appraisal done. And if so, is rescheduling a component of that analysis, that appraisal?
Yeah, so a couple of things. Let's go through them. I'll go in reverse order. We actually don't use third-party appraisals because we find that those tend to be highly influenced by the owner of the property that's getting the appraisal. Given our experience, we've looked at billions and billions in hundreds and hundreds of properties across this sector. And so we feel like we've got a pretty good, robust perspective on valuations, particularly the alternative use. There's a lot of data sources that we utilize in regular way real estate. And so now I won't comment so much on the appraisals and how they impact. Let's talk a little bit about valuation. And when you talk about equity valuation and real estate valuation, start with the equity valuation. That equity valuation is typically arrived at from two numbers. It's someone looking at the value of the free cash flows that business spits off or will generate over time, and then it's applying a multiple to it. So when you think about rescheduling, if rescheduling increases the amount of free cash flow that a business is supposed to generate over the next 3, 5, 10 years, whatever time horizon someone wants to use in that valuation, then clearly that element's going to go up. And so that should directly have a positive impact on the valuation. If at the same time, someone who's preparing that valuation believes that rescheduling is a positive step by the federal government and is an important mile marker on the way to the true destination, which is descheduling or legalization or states' rights, then they may feel like that business is worth even more because of that validation from the federal government or limited validation. And so they may be willing to put on a higher multiple instead of a 4-turn multiple, maybe it's 5, or if they were doing 6, maybe 7, whatever that may be, they may be willing to go an extra turn or 2. So you should have both of those elements of valuation going up at the same time. How does it impact the commercial real estate? Well, it's a bit of a step removed, but it's not entirely different because when you think about that real estate, the value of real estate is really looked at as what is the cash flow that real estate can generate for the owner. And that is a function of the rent you own and the likelihood that you're going to be able to increase the rent. It's just a quick example. If you have one property and you're looking at 2 tenants, and one of them is Apple as a tenant, and the other one is a brand new startup company, and they're going to go in for the same rent, you're going to take Apple all day long because you won't have to worry about Apple paying the rent versus the startup. And so when you apply that now to cannabis and you say, okay, with the increased cash flow that's coming off this property, it should be worth more. Well, it's a little bit more complicated because it's a 15 to 20 year lease. You need to analyze, okay, how is this company going to evolve over the next 15, 20 years? Yes, for sure, the credit quality of the tenant is improving with the added free cash flow. But then you have to ask the question, what will they do with the free cash flow? Is it going into discounts? Is it paying down debt? Some of those are going to drive higher sales. Some improves the balance sheet. Both may have a positive impact. And so I'm not really answering the commercial real estate question. Intuitively, one would think that anything that improves cash flow for the tenant and improves their credit risk profile should improve the value of the commercial real estate. But it's not as a direct correlation as I could point to on the equity valuations.
Got it. Jordan, John, you want to add to that?
The most salient point that I mean, both are, the cash flow is very valid. I also would emphasize, like Anthony said, about the signal to capital of the strength and likelihood of success of the underlying businesses. And as we all know, we've been in this space for a long time. This has the potential to be the first meaningful, positive, federal regulation that the industry will have had in 50 plus years, and potentially the only one for the next 10, 15, 20 years, potentially. I don't know. So I really, it's very important at this point, one, to get to that level of, okay, we're no longer in the orphan status where no one wants to talk about us, et cetera, but also longer term, I think it does boost the valuations of the companies, because the risk profile is much lower, given that the industry has now reached a more accepting spot and something that we're familiar with in terms of other Schedule 3 drugs.
Yeah, one thing Anthony said that we're keeping an eye on is, okay, should rescheduling happen, where do these savings go? Is it into reinvesting? Is it passed down to the consumer? All of these are questions that we don't know yet, but ultimately will impact the cash flow and impact the broader industry based on how those savings at the bottom line are translated into company operations. I think also some things that would impact valuations and to hit the bottom line up front, I do believe we'd see some increase in valuations. To quantify would be tough, but I do believe we'll see some positives from historically low valuations where they are today. If we look at cannabis, similar to alcohol and tobacco, just the lack of institutional ownership and the lack of liquidity are two big discounts on cannabis valuations. And if you think about it from a finance nerd model as well, too, not only are you seeing this increased cash flows, but also a decrease in the cost of capital and the discount rate that someone would use to value these cash flows. So you kind of get a double whammy from an equity valuation standpoint that I think will translate, and hopefully some of the investment bank analysts and whatnot will take that into consideration.
Great points, you all. Thank you. One thing it had dawned on me that I hadn't asked and probably should have asked first place, is how do you describe your sweet spot? Pre-rescheduling and post-rescheduling. That is, like, what's the prototypical customer client you'd be looking for?
Sure. So we've definitely touched a lot of different operations, both ancillary as well as plant touching. So historically, I've had exposure in a lot of different ways. I think there's a broad industry with a lot of opportunities. So we try and keep our box not too narrow, especially as we aren't restricted as a REIT or restricted to just equity or just debt. We really look at a lot of different opportunities. But right now, what I would say excites us are folks that are able to be profitable, generate growth, organic growth, same store sales, all those things in today's environment. We really look at customer loyalty, customer retention, how they interact, because what's unique with cannabis is you have a sub $20 right now, sub $20 an hour wage earner that's really directing 100% of the income that's flowing into these operations, and that's the point of sales. So the way we look at interactions with bud tenders to top management is something I think that's unique to how we approach our analysis. And I think we're excited around U.S. operations, around some retail focus and retail expansion, and in particular those that are able to generate a lot of organic growth.
So similar to John, we've deployed across what I call 25 subsectors of the cannabis industry. We've tend to really be excited and interested in data, not just for the sake of data, but because we see and believe that ultimately that data can be, either monetized and or used really strategically to understand, like what John was saying, like how do we, understand who the consumer is to make sure that we're providing a great, in-store experience, hit them with the right offers, all these things that data is going to be utilized for and is used in all other industries to help, consumer packaged goods, companies, be efficient with their marketing and advertising. So I think data is a huge piece of, what the future in this industry has. In terms of like the change with rescheduling, I alluded to a little bit, opening up new distribution outlets, whether it's, existing, just retail or, other maybe pharma related opportunities. So understanding, what's the growth of the consumer base because of, now a rescheduled product, and how do we leverage existing distribution channels to sell more into that and start, reaching those consumers. So I think obviously, as we all know, it's very, very early days. I mean, this is, an industry that's, been around legally for 10 years, and in many states it's still not. So it's like first, second inning. So I think, at this point, finding the established companies that have proven that they can continue to operate profitably and that capital being deployed into them is likely going to produce growth, as opposed to an earlier stage company where, you're betting and hoping that they reach certain thresholds, but there's a lot of questions there. And so I think naturally where the industry is, capital is going towards established operators, and it makes, newcomers, and if you're not capitalized yourself, very, very challenging to start and catch up. And so I think from an operator standpoint, that's something to pay attention to and think about. Where are there opportunities to really get in and establish yourself and be differentiated?
They covered it. All of that. The only thing we would add at NewLake, since we're property focused, is an analysis on the jurisdiction. We prefer limited license jurisdictions. I think they provide more value for our properties. And then the alternative use value of that particular property. We're always thinking about what could this property be other than for use in cannabis. But all of what they said, they covered it well.
Great. I'm wondering how quickly you think you can adjust your standard operating procedures, your investment guidelines, all of that, including due diligence practices and so forth. How quickly would you be able to adjust if rescheduling happens? How long does it take? Years for you, or 2 months, or?
I'll start. No time at all, because we're really not changing a lot, quite frankly. I mean, it's kind of up here. You're thinking about it. Do you think about it entirely differently? No. I mean, you're looking at free cash flow and the number changes. And so your metrics you're looking at are all the same. It doesn't change fundamentally the way we pursue our business. So quite frankly, it's not going to have a huge impact on what we do at all.
Jordan, John?
Yeah, for us, I think it's going to be an evolution. We are thinking about, as you can tell, like, what does post Schedule 3 look like? At the same time, there's a lot of question marks, that you could probably pick up on that, we need to do that deep dive and start to understand and build the relationships with other, outlets and distribution and other potential partners. And that's going to start a long time, right? Because everyone, as we've seen, like everyone's kind of new quantity as the space evolves. And so you've got to start to get comfortable with who's actually, going to do what they say and perform and hit their numbers and all that. And so it just, again, adds to the complexity of how do we evaluate opportunities. I don't know if you want me to answer this question that about the demand, but I can chime in on that at some point if you want to.
Yes, please,
bring that in.
please.
Okay.
But let's see if John wants to add anything.
Okay, sorry.
Yeah, if you wouldn't mind. Yeah.
Yeah, go ahead.
I think for us, it just means less focus on tax strategy, which would be nice. But outside of that, similar to Anthony, it's really not much changes is how we look at companies and do our due diligence and analyze. And I think there's a lot to uncover that Jordan has definitely spent a lot of time on around what the distribution channels, the SOPs, all of that stuff looks like, which we'll keep an eye on. But for us as investors, won't really change our process or how we look at deals.
Great. Joseph Schultz again. Has consumer demand kept up with projections from a few years back?
So I'll answer just from my perspective. It seems like it has. I think maybe sales haven't hit, in terms of the total revenue, but I think a lot of that has to do with the competitive nature of the industry and the price of, both raw flower and then ultimately products on the retail shelves going down in more competitive markets. As these guys talked about, the limited license market presents a much more attractive, short-term horizon because of, you're not going to get flooded with, more, too much supply, but at the same time, you're going to start to see people, prove and establish themselves as a low-cost producer or a low-cost retailer, and that's going to start to drive down pricing. But it does seem like, just anecdotally and from an overall kind of sales standpoint, as the industry continues to go up, that the demand is phenomenal. I think you look at examples like in liquor stores where they've started selling THC infused beverages, that could be up to 10 to 20% of the sales of a liquor store is around THC beverages. So I see the kind of the underlying metrics and kind of ecosystem for the industry to be really positive. I think there's more people getting away from alcohol and into more health and wellness type lifestyles, and anyone who kind of tracks their performance post drinking, the next 1-2 days are really, it's hard for the body to recover. And I don't think that cannabis has that same effect. So I think people are naturally, being more open to it. And that's where the THC infused beverages, I think, is ultimately the big play for many companies, because mainstream adoption, I think, is going to come through from beverages, putting down the beer and picking up the THC infused beverage.
Or wine.
Yeah, putting down the wine. Well, I don't know. People who drink wine, they're not going to put down the wine. I think people who put down the beer might be, but the wine, you guys are very serious about wine.
Just one thing to chime in on that around the industry projections. I think it's important to note, especially a few years ago, nobody saw what was going to happen with THCA, with Delta 8, with that entire HTC category. So it's honestly hard to do an analysis, in my opinion, and say how has demand fared against the projections, because that cannibalization, that overlap of a market is so nuanced that it's difficult to project. And so I think we have to look at it with all of that in mind. And to echo Jordan, still see strong growth, even considering those factors.
Yeah, I completely agree with it, but it's also fascinating, like everything in the cannabis space. You have to, the answer to the question depends on what market you're looking at. But the thing that's really fascinating is when you look at some of these markets, you actually see the supply demand concept moving, and particularly in relation to the illicit market, where you see prices come down, where you can be competitive with the illicit market, you actually see demand go up. So you actually see the elasticity of the marketplace real time relative to the illicit market. So it tells me that there is a robust demand for cannabis, and for the legal players, they need to find the right price point to really convert the illicit sales into legal sales. Part of that dynamic is taxes that are imparted by the state or the municipality. And so we're watching this play out in all the different markets. And over time, organizations and municipalities and states will figure out how they can all optimize their outcomes, which is increasing sales, increasing taxes. But there's absolutely robust demand out there, whether it be for the legal channel, the illicit channel, or now call it the gray channel. We have to come up with a moniker for this hemp-derived product set.
Well, before we run out of time, I think maybe the most important question to ask you is, how do you find your clients, your investors, the companies you want to invest in or make a loan to? Who's first?
I'll go first. Okay. So as a publicly traded company, everybody could find us. Our ticker is NLCP. We spend a lot of time at conferences and engaging in non-deal roadshows and engaging in investors one-on-one and having lots of information available on our investor relations page. From a transaction perspective, where do we find our tenants? We've been around the sector for over 5 years now, and given our profile and our underwriting approach, it tends to go towards the larger organizations. It's unlikely we'll do a transaction with a single store operator. And so we've spent 5 years building up a robust database and set of relationships with operators across the industry that we're likely to do business with.
Yeah, I'll say similar. So I've been in the industry since 2015. And as we look at our pipeline of opportunities and a lot of our investments that we've made thus far, it's really been relationship driven. I think we've seen folks that in particular were interesting 3-4 years ago, got more interesting 2 years ago, and now are opportunities this year. And that's how we see the life cycle. It's a long process. No one, I feel honest in saying this, no one's come close around any projections almost ever. And I think being able to watch those revise down, get more and more realistic, and see folks grow into an institutional investable company has been a fun process for us to go through. And in particular, seeing those relationships evolve into opportunities has been exciting. So that's how we see our deals.
Thank you. And Jordan.
Yeah. So, we've got 30 portfolio companies. So at this point, we're looking to largely, add on and find complementary or, try to vertically integrate, even outside of the plant touching side. So it's really for us about kind of this inside out and how do we find other companies that we can add to our existing footprint of businesses and make each of those companies stronger, but tend to, definitely go towards companies that have been established for a few years, have proven it out, and now are looking for growth capital. It's just, obviously a lower risk for us, which is critical in terms of ultimately getting to returning capital, to our investors.
Well, I would love to continue this conversation, but I'm sure you all have other things to do. I do want to thank you so much for your participation. This is one of the best webinars I think we've had in a very long time. Thank you very much.
Thank you.
Thanks for having us.